Hello, everyone. Welcome to this Energy Quick Chat where we rub minds with stakeholders and players in the energy market. The global gas market has seen mixed trading since the beginning of the year, but the International Energy Agency says it expects global gas demand to grow to below 2% year on year for the second half of 2024, down from 3% in the first half, with an overall increase of 2.5% for the full year, to be driven largely by the Asian markets. Meanwhile, LNG supply is expected to grow in the current second half, with new liquefaction capacity coming online in the United States and West Africa. To give us some perspective into these figures from the IEA and the global gas market, I have joining me Paul Hickin, Editor-in-Chief at Petroleum Economist. Paul, it's good to have you here today.
Thanks. Great to be back, Justina.
Now, can you summarize the key takeaways from the IEA's latest report on the global gas market for the third quarter of 2024?
Yeah, so I think what's interesting is it's important to note that Europe again has filled up its storage quickly ahead of time. It doesn't want to be caught short in terms of any risks around winter shortages. So it's really, and those price spikes we saw a couple of years ago. So it's really filling up quickly. That's playing into the factor. Another thing is important to note is the long-term trend is how much gas is going into European power generation. And that's a trend that's starting to reduce. It has been reducing for a while. We did see a snapback because of energy security concerns, and even coal come back into the mix, especially like places like Germany and others, and even the UK to some degree, as a result of the security concerns. But there is a general trend to take fossil fuels out of the European power generation mix where possible. And that is a longer term trend. And that is why you're seeing this shift towards other big demand centers for gas, Asia, and the global south generally.
Right. There's a saying that goes never to be caught on fresh, and that's probably what is happening in the EU on that storage front. Now, the report also highlights strong growth, particularly in Asia, like you mentioned. What factors are driving this demand, especially for fast-growing economies like Africa? Do you believe this growth trajectory is sustainable?
Yes, I think so. I think you look at what's happening in terms of gas, and you think that is the long-term fuel for base load power, for sustainability, because what you're really seeing, what's often neglected in sort of policy circle discussions, is that coal to gas is a huge leap forward in terms of clean energy generation. And we often talk about gas being a fossil fuel, but it's much cleaner than coal. And that is where you're really seeing the substitutions, especially across Africa, Asia, Latin America, those areas, and where the cost of renewables is so high. Yes, there's certainly investments going into renewables, but I think what you see is that both the energy companies, the oil and gas companies, and policymakers, environmentalists like to lump gas in as a fossil fuel. And yes, it is tied to oil. It is a fossil fuel. But at the same time, those are sometimes political ends, because actually gas should be freed from that sort of label in a way. It should be seen as much more as a cleaner potential fuel of the future. And I think what you're seeing, especially in Africa, is huge amounts of investment going into gas as an important long-term fuel, both for domestic use and as a LNG, as a way to export. And what's very interesting in Africa, I think in particular, is it's not just gas was often seen as a very North African product, Algeria, Egypt, Libya as well. And what you're seeing now is sub-Saharan Africa is really investing in gas. You know, traditional oil producers like Nigeria, really going strongly on gas. Other traditional oil producers like Gabon have a master plan for gas. So it's going across sub-Saharan Africa, investments in gas. And traditionally, gas was probably seen in Africa as a kind of an unnecessary and extra costly product of the oil process, where oil was where all the money was at. But that's changing because it certainly could fit into a much cleaner long-term energy mix, especially, like I said, away from coal. While often there is a lot of investments in renewables, which is cleaner than gas, still gas offers such a big long-term, sustainable, reliable, and cheap option. And the trick is that actually gas is still more expensive than coal. So you're still seeing a lot of investment going on in coal across Asia and elsewhere because it's cheaper. But actually, it's still only if you get enough gas into the market, if you're seeing the investments which is around Africa, you could potentially see a lot more gas on that market, bring down prices, and make it more competitive as a long-term sustainable solution.
Now, that I've seen that, like you mentioned, that dynamics in gas prices, even across Africa, and particularly I see it over here in Nigeria as well. Now, geopolitical tensions are causing price volatility that we're seeing as well. How do you see this impacting the balance between gas supply and demand moving forward?
Well, I think there's been certainly, I think what we see now is that there's less reliance on pipeline gas, and this diversity of supply is what has always been a big important part of the energy mix of any country's energy mix. Should be diversity of supply and diversity of demand. And this is, maybe there was a little bit complacency across Europe potentially. The big push on renewables, it took sort of Russian gas supply for granted. And we see it generally where oil is a classic tool, a classic example to learn from. What we saw with the Yom Kippur War in 73, 74, and what led to the creation of the IEA after that, the mandates to keep oil in storage, enough oil across the OECD countries to keep storage. And we saw with the Russia crisis that, storage, there was limitations what we could do with storage, LNG, and what we see with Africa as well, with floating LNG infrastructure coming on board. Quick moves to try and build the infrastructure. But I think the lesson is always, when we see crisis or risk to shortages, what you see is diversity of supply is the ultimate yardstick that most countries, consuming countries and producing countries, should keep in mind.
Right. And now, looking at the things you have mentioned about keeping that supply, how will the expected acceleration? You mentioned when we were talking earlier, when you started, you spoke about the growth in LNG supply. Now, how will the expected acceleration in LNG growth supply in this current second half impact new capacity coming online in the US and West Africa?
Well, I think what you're seeing is that's what happens when you have a lot more new supply coming on. It should bring down prices, and it should incentivize demand. And this is a positive. For long-term growth, if you have a sufficient supply coming on, prices come down. The demand it encourages that demand, and what we want to see is more coal to gas switching and more encouragement to invest in LNG and gas infrastructure from importing countries, because sometimes that has not quite been there, especially across some of the poorer parts of Southeast Asia, which could potentially be big demand centers for gas and LNG. It's not quite emerged, but you see big countries, big consuming countries like India having huge plans around gas, and so there's certainly from a strategic perspective, consuming countries are really making investments, maybe not so much in Europe, but especially away from Europe, in Asia and elsewhere, in terms of getting that a lot of infrastructure for gas and and other fuels as well. But again, diversity of supply and is crucial.
Now, the S&P suggests falling LNG and gas prices due to reaching full storage capacity in the EU. How will this development affect gas imports and price stability in the region?
Well, you talk about in terms of Europe, or yes,
Yes.
well,
Yes.
yes. So that should bring prices will come down. It's a positive. For consuming countries, over extra supply, lower prices is all very positive. What you have to be careful about in these regards is that you don't stop. You don't, you can still try to find that and it's also positive for Asia, where they can snap up that cheaper gas where Europe's already filled their storage quotas.
Right. Now, give me your inside outlook at on the world gas market at Petroleum Economist.
Well, I think what's really important is we're going to see a huge swathe of gas LNG coming onto the market, longer term trend. And I think that's going to reshape in terms of bringing down incentivized demand. And you're going to see a lot more gas. And that should be a real positive for energy security globally, hopefully in terms of providing the right energy to people around the world, because what we really want to see is cheap, reliable energy for everyone. And you see that there's always a risk going forward in terms of the dangers of energy complacency, especially as you've seen in Europe is one of the big lessons. While there is a push to move away from fossil fuels, we want a cleaner environment, we want to hit those net zero targets. At the same time, security supply is crucial. So while we're still trying to, and gas is a pivotal fuel. It's often been a political football, seen as a backup fuel, a transition fuel, a fossil fuel. But it's all of those things, and it should be treated as such. And it'll be interesting to see how gas fits into that energy mix long term, because I think gas probably will have a very long term role to play way beyond the lifespan of oil.
Right. With all eyes now on gas as a transition fuel, we'll keep looking at that and seeing how that goes in the near future. Paul Hickin, Editor-in-Chief at Petroleum Economist. That's it on our Energy Quick Chat. Thank you everyone for taking time to watch. Make sure to comment, like, and subscribe to see more videos like this, and follow Frontier Africa Reports across all our social media handles. Thank you so much, Paul, for being a part of the show. And I am Justina Okechukwu. Bye for now.